Wow, Wasi! Look at that watch!
You also forgot to mention my ring.
I am impressed. But how can you afford all this stuff?
Judy, it's easy. I dipped into my savings kidogo and took out a loan against my future paycheck.
You mean you took a salary advance, right?
What? Yeah, sure, a salary advance.
Please tell me you took it out with a reputable financial institution.
Sure. I met him on the street corner. He had a nice tie on.
Are you crazy? Do you even have funds to pay the loan?
I make 20k per month and I have to pay back 17k. So I'm on good. Don't stress.
Wasi, but what about your monthly expenses? Like your rent, transportation and food costs? If you miss your payment, the interest rates can skyrocket and penalties will be severe.
I didn't think it could turn out so bad. What should I do?
Wasi, first things first. Let's try and return the items you purchased and pay off the loan. Debt is an amount of money borrowed by one party, a debtor, from another, a creditor. Many individuals and companies use debt as a method for making large purchases that they could not afford under normal circumstances. For an individual, they may borrow to finance education, a car, or a home. For business, they may seek to borrow funds to expand their operations. Let's explore debt further. Living debt-free is not necessarily a good thing. Good debt is an investment that will grow in value or generate long-term income. A perfect example of a good debt is taking out student loans to pay for a college education. First, student loans typically offer low interest rates, and a college education means that you'll make more money over your lifetime. It's an investment in your future. However, just like there's good debt, there's also bad debt. Bad debt is incurred when purchasing items that quickly lose their value, do not generate long-term income, and typically carry high interest rates. Although you may receive short-term gratification from a trip to the coast, such items do not appreciate in value.
Going to the coast to party this weekend. I just need to secure the loan. I have to be seen and dressed to impress.
Think about this. Borrow money you don't have to purchase things you don't need to impress people you don't know. Before you take out a loan, there are some very important points you need to consider. Before taking out a loan, you may consider dipping into another emergency savings fund. Reach out to friends or family, or ask your employer for a salary advance. Only borrow as much as you can afford to repay. Make sure your installments fit within your budget. If you have existing debts, can you manage additional obligations simultaneously? Remember, you should never borrow to pay off an existing loan. Can you delay the purchase or not make it at all? Borrowing money can be a wise practice when you know with certainty that you can pay it off with interest. Remember, properly managing loans can positively impact your credit score. A credit score is a rating computed by credit reference bureaus based on information available on your credit report. A credit report is a report detailing a person's financial history specifically related to their borrowing behavior. Therefore, like a test score, the higher the score, the better your credit score. Building a strong credit score is fairly easy. Individuals with good credit scores have frequently paid bills, made timely repayments on previous loans, and lack defaults on current outstanding loans. A good credit score may help you attain more favorable loan terms, such as reduced interest rates, flexibility in the length of your repayment and required tangible collateral, as well as faster feedback on loan requests. On the other hand, individuals with low credit scores have frequently made late payments, filed for bankruptcy, overburdened themselves with debt, been accused of fraud, and/or experienced a foreclosure. If you do have a low credit score, you can still repair it. Settling your outstanding balances and regularly paying your remaining loan obligations can get you back on track to obtaining a good credit score.
Why do I even need a score? They can trust me. See, here's the 20 bob I owe you. I'm reliable.
Wasi, You actually owe me 2,000 shillings.
Oh, really? I'll pay you tomorrow. But Judy, how do I even know it's accurate? And my score may be low. They could blacklist me.
Let's first understand the purpose of credit information sharing. Credit information sharing is a process through which lenders exchange consumer information, specifically related to a consumer's borrowing history. This exchange is facilitated through credit reference bureaus, commonly referred to as CRBs. In simple terms, credit reference bureaus pull together the information of consumers in the form of credit reports, which even you can access. In Kenya, the Association of Kenya Credit Providers is a body that oversees the credit information sharing mechanism. You can visit www.akcp.co.ke to learn more. Sharing borrowing history of consumers can result in the following: a decrease in bad debts and defaults, reduces borrower and over-indebtedness. Consumers become wise in managing debt because now there are more consequences. More consumers are able to access affordable credit, rewards good borrowing behavior. Consumers with healthy credit scores are able to access loans with more favorable terms. Lending decisions are made faster because more information is available. As you can see, credit information sharing plays an important role in stimulating economic development, rewarding positive borrower behavior, and reducing loan defaults. Remember, even if you have a low or no credit score, you can still access credit and through good borrowing behavior establish a healthy score. It is also important to frequently check your credit report in order to monitor your score and ensure accuracy and correctness of the information. Remember, consumers have rights to know what information the lenders have submitted to the credit bureau regarding you, to receive a copy of your credit report within 5 days of your request, to a free copy of your credit report at least once per year. You can request a copy through a credit reference bureau and its licensed agents to correct and or remove any errors in your report. Furthermore, a credit bureau cannot give your information to a lender unless reasons for release are legal, and reports obtained by lenders are to remain confidential. When borrowing money, don't simply look for a loan with the lowest interest rate. Consider the following: the rate of interest you'll be charged. The interest is usually expressed in terms of an annual percentage rate of charge, APR for short. The APR is expressed as a single percentage number that represents the actual yearly cost of funds over the term of a loan. The loan amount: only borrow what you can afford to repay. The length of the borrowing term and the frequency of repayments should fit within your budget. Additional fees: read the fine print. It's your responsibility to understand all the fees associated with the loan. Customer service: it is important that you select a lender with a demonstrated record of excellent customer service. As we've mentioned, loans can be a great way to help pay for higher education or assist in purchasing a home. Here are some tips to help you become a responsible borrower. Keep track of how much you're borrowing. Think about how the amount of your loans will affect your future finances and how much you can afford to repay. If you're securing a loan to support a higher education, it's important to research starting salaries in your intended profession to get an idea of how much you're likely to earn after your graduation. Understand the terms of your loan and keep copies of your loan documents. It's your responsibility to make payments on time. Find out about the specifics of the loan repayment, including when repayment starts, how to make your payment, and repayment plan options. Keep in touch with your loan provider. If you're having difficulties making your scheduled loan payments, your loan provider may have options available to help you keep your loan in good standing. For many, seeking loans and or scholarships to finance their education can be the best investment they make. History has shown that investing in higher education will pay off. Here are some benefits to earning a degree. Earn more money. College graduates earn more than secondary school graduates over the course of their careers. Get a good or better job. A college degree can give you an edge in the job market. Build your network. The relations you build with students and faculty will continue to help you shape and advance your career. Change the world. The more education people receive, the more they seek knowledge that can help them question and replace the status quo. Are you concerned that obtaining a loan to fund your higher education is out of reach? You shouldn't be. The government and various financial institutions have made accessing loans to financing your education easier and affordable. Individuals pursuing a higher education can turn to the Higher Education Loans Board, HELB for short, for assistance. Pulse Vision, a loan available for every Kenyan enrolled in higher education. Visit www.helb.co.ke to learn more. Remember, your student loan should only be used to fund your education, not clothes, fancy dinners, or vacations. In the event that you need a loan, you may also turn to Savings and Credit Cooperatives, SACCO for short. A SACCO is a member-driven cooperative. It is managed, owned, and governed by its members, who have a common bond. They can work in the same industry, belong to the same church, or live in the same community. The members agree to save their money together in the SACCO and to make loans to each other at affordable rates of interest. Therefore, members can earn a modest interest rate on their savings and also borrow at affordable rates. Still in need of cash? A salary advance is an option, but proceed with caution. Today, lenders offer customers salary advances, also referred to as a payday loan or cash forward loans. A salary advance tends to be a small, short-term loan that mostly salaried individuals can acquire in cases of emergencies. There are drawbacks to salary advance. In particular, many people find they get caught up in vicious cycles of continuously taking out and extending salary advances, which becomes astronomically expensive. In addition to mortgages and personal loans, credit card debt is also another more common way to borrow funds. A credit card is issued by a financial company and gives the holder an option to borrow funds to purchase goods or services. Like other debt, credit cards charge an interest. However, these rates can escalate rapidly if you miss a payment. So how do you pick the right one and use it wisely? Below are a few points you should consider. Credit card spending should fit within your household budget. If you pay your balance in full each month, you'll never have to pay interest. However, if your credit card balance grows from month to month, that's a sign that you're overspending. In Kenya, banks may require a guarantee in the form of a fixed deposit, which ranges between 100 to 125% of the credit limit. A credit card credit limit is the maximum amount that can be borrowed on a credit card without penalty. If you're interested in obtaining a credit card with a limit of 500,000 shillings, you may be required to put 500,000 shillings into a fixed deposit account. Consider the grace period. The grace period is the amount of time you have to pay your balance in full before a fee is charged. The APR and fees. Most credit cards offer different APR and fees on the type of transaction. Do your research. Avoid chasing teaser rates and special promotions. Make sure you understand how long the promotional period lasts and how high your rate will climb after the offer expires. Avoid cash advances. A cash advance allows credit card holders to withdraw or borrow cash up to a certain limit. They can be costly. Never lend your card to anyone or give your account number over the phone unless you've initiated the call. If anything looks suspicious on your statement, report it to your credit card company immediately. Prepaid credit cards offer the convenience of a credit card without the risks associated with it, high interest rates, and accumulated debt. A prepaid card is a payment card that is loaded with money. A prepaid card looks just like any normal credit or debit card and is generally accepted at your local store or your favorite online merchant. However, unlike credit cards, prepaid cards do not allow you to borrow money. Furthermore, unlike debit cards, prepaid cards are not linked to a bank account. Prepaid cards are great for individuals looking to manage their spending or for teaching youth how to manage money responsibly. However, prepaid cards do have several big disadvantages. Prepaid cards are not considered a form of credit. Therefore, they do not help to build credit history. Prepaid cards may have a number of fees. These may include, but are not limited to, activation fees, monthly maintenance fees, transaction fees, and inactive account fees. Prepaid cards should not be considered as a permanent replacement for current or savings accounts. Remember, bank accounts also come with the added benefit of earning interest, being able to write checks, access to various saving vehicles, and more financial protection. Poor planning, lack of savings, high interest loans, lack of insurance, and other factors can also lead to a negative financial situation. Here are some tips to help you avoid and/or repay your debt. Rank your debts in the order that you want to pay them off. Your list should include the minimum payment amount, the interest rate, and how much you owe. Create a budget and stick to it. A clear budget will prevent you from spending thoughtlessly, buying on impulse, and help you decide how much extra money you have a month to pay towards your debt. Maintain clear financial records and a regular payment schedule. After you've paid off your debt, begin to put the extra money you have into savings. Maintain insurance coverage. Insurance is an absolute must in order to avoid financial trouble. Pay taxes correctly and on time. Unpaid tax debt that accumulates can also lead towards financial trouble.
Hey, Judy!
Hi, Wasi. Wasi, didn't you learn anything?
Chill, Judy. I did. You see, I took your advice. I borrowed money to expand my DVD empire. Now I actually have a proper budget and can actually afford some nice things. Don't worry though. I got a great deal on this Rolex.
You mean a Rolex?
No. A Rolex. R-O-L-U-X. I'm styling!